If you're looking for a way to buy a house where credit is a non-issue, then I might have a strategy for you. Today, we're going to discuss how hard money loans work, and we're going to get started right now. Hello everybody and welcome back to All Things Knoxville with me, Ben Barredo, your local real estate pro and relocation expert for East Tennessee. Today we're going to discuss hard money loans. Also, if you're thinking of making a move to East Tennessee, whether you're wanting to buy, whether you're wanting to sell, whether you're wanting to invest in real estate, or you just have some questions, hit me up to see how I can help you out. My contact information is in the description and it's also right here. Now, with all that out of the way, let's jump into the video of today. So let's start this off by talking about what a hard money loan is. Basically, a hard money loan is a short-term, non-conforming loan, or basically a loan that doesn't meet Fannie Mae and Freddie Mac standards, and that doesn't come from traditional lender sources like banks or mortgage specialists. Instead, they come from private entities, whether they're individuals or they're private groups or private companies that accept the property or an asset as collateral. You don't pay it back, then they come and they take the house. That is where the hard part of the hard money comes in. It refers to the tangible asset being used to back the value of the loan, not specifically in combination with the borrower's creditworthiness. Unlike traditional loans, hard money loans come with a fast and typically less stringent approval process, making it ideal for quick purchases or investors. Now, that doesn't mean that you can have a horrible track record of paying back your bills. They still look at your credit and your history, and some do expect a good credit score. Still, there is an upside to them. Besides being less stringent on your credit history, they're fast, like lightning fast. You see, a mortgage, a traditional mortgage, might take months between the pre-approval process and the closing process before you get the keys to that house, where a hard money loan could take a few days in total to secure the loan and then purchase the property. Now, here's what you need to know about working with a hard money loan. Hard money lenders aren't subject to the same regulations as traditional conforming loan lenders. As a result, hard money lenders are, for the most part, free to make their own rules about credit scores or debt-to-income ratio, or how they expect to get their money back from the borrower. It's possible to find a hard money lender who will give you a loan even if you've been denied by more traditional lenders. For hard money lenders, the most important factor isn't the borrower's credit worthiness, but the value of the property being purchased. You should note that hard money loans are expensive. But how expensive? Well, let's compare interest rates on these loans to more traditional loan types. In May of 2022, the average rate on a conventional 30-year fixed rate mortgage was 5.09%, according to Freddie Mac. Hard money loans can have a much higher interest rate, anywhere from 8 to 15%. Hard money loans can also be more expensive depending on the preferred loan to value ratio of the lender. If a lender will only finance 70 to 80% or less of the property's value, then you're likely going to need to bring a sizable down payment to the closing table. If you don't have the cash for this, you might have a tough time finding a hard money lender that's going to be willing to work with. Let's get into a little bit of the pros and cons of hard money loans. So if you're thinking about getting a hard money loan, make sure you understand all the advantages and the disadvantages that come with this type of loan. First, let's discuss the pros. Now, as mentioned, the pros of using a hard money loan include the following: your faster approval process, approval based on property, not credit history, more flexible terms, less strict underwriting, the opportunity to fix and flip properties, interest-free payments for a little while, and stronger offers because hard money loans, basically it's cash. Now let's talk about the cons. Now, there are drawbacks to hard money loans, and those include the following: very high interest rates. They often require a very large down payment. They have shorter terms, meaning less time to repay the loan back. The entire loan amount is usually due at the end of the interest-free period. Riskier than traditional financing, obviously. If you don't sell the house or if you don't come up with the money to pay it back, you're losing the house. It may require a track record of successful investment strategy, which is why it's probably important if you're a first-time hard money borrower, you may want to find a partner to back you that has a track record of success. Now, there are other alternative loans that you might be able to tap into if hard money loans are still unattainable or not your thing. Before I tell you about those other loans though, make sure to mark this video from last week where I talk about 7 reasons why you should move to Knoxville. You can watch that video by clicking right here, or you can follow the link in the description. Okay, so let's talk about some alternatives to hard money loans. If you're not interested in a hard money loan, consider these other alternatives. You can do private money loan, basically borrow money from individuals. You can reach out to family, friends, or other investors, private entities that you know personally. Although it may feel uncomfortable when you want to ask for money, it could still be an option. Another option for homeowners is to tap into a HELOC, or a home equity line of credit. A HELOC is useful when you want to embark on home improvement projects to increase the value of your home. The next option is a home style loan. A home style loan from Fannie Mae is a government-backed mortgage that allows you to renovate your house without using your own cash or your own savings. Look, the bottom line is hard money loans can be very risky. Hard money loans can be useful as a tool if you need financing through less traditional methods. However, these loans come with high rates and a significant down payment and a lot of risk, especially if you don't have all your ducks in a row. So if you decide to go the hard money loan route, make sure you've got your research and your numbers in place and you know the route you got to take. Otherwise, leave the hard money loan up to the professional investors. That's it for today's video. Thanks so much for stopping by. I hope you enjoyed the topic and the information, and I hope I see you back next week. In the meantime, have a great rest of your day. Have a great rest of the week, and we'll see you later. Bye-bye.